Alright, let's talk about probably one of the most important concepts that we will have here in accounting. So it's really important that you pay attention. So our basic accounting equation, this is kind of the fundamental foundation for everything that we do in accounting. And the basic equation is assets equals liabilities plus stockholders' equity. So I'm actually going to take out the equity part here. So let's just we'll cross that part out. So if we look at assets, which is an A, liabilities, which is an L, and equity, we get the word ale. And what you can see here is I try to get students to remember drinking ginger ale or just a good old-fashioned ale to remember your basic accounting equation. So let's break that down a little bit further for you, because for a lot of you, accounting is a new language. It's the language of business, so you're not as familiar with some of the terminology. So assets are things that companies own. And so, for example, companies own cash, equipment, supplies, inventory, buildings, land, you name it. What you can think about, things that companies own. Liabilities are things that companies owe. So for example, they might owe suppliers, they might owe their lenders, like a bank, they might owe their employees, they might owe taxes. Those are what we call liabilities. And then the equity component is the difference between what we own and what we owe. So if we take what we own, which are our assets, minus what we owe, our liabilities, we get this equity component to the basic accounting equation. So again, it's that ALE. So anytime anyone asks you, what is the basic accounting equation? Think ALE, assets, liabilities, plus equity. And assets are things we own, liabilities are things we owe, and then equity are things we own minus what we owe. Let's look at a quick example of how we might manipulate that basic accounting equation, and then we'll expand on it a little bit later here. So the basic accounting equation, it says if my assets are $30,000 and my liabilities are unknown and my equity is $20,000, what are my liabilities? Well, we can reorganize that basic accounting equation. We can say assets minus my equity equals liabilities. So if that's the case, if my assets are $30,000, my equity is $20,000, that means my liabilities must be $10,000. Number 2 there says we don't know what assets are. Liabilities are 50, equity is 60. Well, with our basic accounting equation, we know 50,000 in liabilities plus 30,000 in equity means my assets have to equal 80,000. And lastly, in this case, we don't know what equity is. We know assets are 90. We know liabilities are 10. So if we take our assets minus our liabilities, we can find our equity. So if assets are 90 minus my liabilities of 10, that means my equity has to be 80,000 as well. Hope that gives you a brief introduction into the basic accounting equation.